It's a perfectly legitimate question. Why have I changed my trading strategy a million times over the past decade? The answer lies in some very simple logic that I think just about everyone would agree with. And this is it. The only constant is change. If things are not constantly improving and evolving, you end up plateauing and you end up never living up to who you truly could be. Trading is no different. As I've traded for the past nearly a decade, I've continued to learn things that seem to work better. I learned ways of controlling risk that are more creative and more dynamic and more fluid and better account for the context of different trading opportunities. And I've learned ways to enter whenever price is a little bit more likely to reverse than not. And over the course of the past nearly a decade, I've been very well served by constantly changing my trading approach. This may come as a surprise to a lot of people who say, if something works, why change it? So I'm going to show you here in today's video. I started trading in 2016. The very first trading approach that I learned was to buy after there was a indecision candle followed by a bullish engulfing candle with the stop loss right below the low of that candle and a target of a 1 to 2 risk to reward ratio, and to sell and vice versa. Indecision candle, bearish engulfing candle, enter, stop loss above the candle high, and then I'd take profit at 1 to 2. Needless to say, I'm no longer doing this. The next trading approach I learned was an RSI divergent scalping strategy on the minute 5 chart, which I kind of learned through experience and a little bit from places online. You would essentially just wait for the RSI to get to the 75 level, and then you start looking to sell. Then you would look for RSI divergence from the main chart in the RSI window. And then if that happened, combined with a little bit of experience, you'd be able to short that, and then you'd add to it if it went against you. And then if it went into profit, you'd close it in profit. And the same thing vice versa for buys. Needless to say, I'm no longer doing that. As I continued on, I traded support and resistance, and I've used high risk to reward ratios. I've used 1-to-1 risk reward ratios. I've used negative risk to reward ratios. I've used hedging, I've used dollar cost averaging, I've used adding to winning trades, I've used dynamic stop losses, I've used trailing stop losses, I've used moving averages. At one point I was using Fibonacci and trend lines and a bunch of other stuff. And now what I do is essentially the same thing I've done for the past decade, though the mechanics have changed. And what do? Basically, all of us, including you and me, are just looking at a chart and trying to ask ourselves if we think price is going to go up or down. Really think about it. That's all we're trying to do. You're looking at a chart and you're asking yourself, do I think price is going to go up or down? And you generally come to one of 3 answers. The first answer is up, the second answer is down, the third answer is I don't know. And that's usually the case most of the time. You don't know, so you don't take a trade. And whenever you then take a trade, you participate in the trading idea that you think is likely to occur, and then you pair that with some sort of risk management, right? You have to figure out what position size you're going to be using, whether you're trading Forex, stocks, crypto. You have to figure out how much is truly at risk, whether it's a percentage or a set dollar amount you want to risk. You have to figure out what are you going to do if you're wrong, what are you going to do if you're right? Are you going to manage the trade and let it run, or are you going to just take profit at a specific area you've already preset? What are you going to do if you're wrong? Are you going to add to the trade? Are you going to hedge? Are you going to just close it at a small loss? Are you going to let it hit a stop loss? Are you going to extend the stop loss? Are you going to tighten up the stop loss if it starts going into profit? Are you going to close if it just goes sideways, break even, and ranges? There's all these different things that you're going to do to control risk. And you are going to learn various different ways to either trade and control risk. And the combination of your experience as well as those little individual mechanics is what will constitute whether or not you're actually profitable. I'll be the first to say, this is not easy. Almost everyone fails. If you're watching this video, the hard, sour truth is that you're probably going to fail at trading. Trading is risky. Most people lose money. You're probably going to keep losing money trading. Even if you try for years, and even if you listen to everything I say, and even if you watch all of the YouTube channels about trading here, you're probably still going to fail. This is the cold, hard, brutal reality. But what I will say is the distinction between people who continue to fail versus the ones that actually succeed, they continue to change their trading strategy. They continue to optimize it, to update it, to audit what they're doing, to see what could work better, to run through scenarios about what happened to see whether or not they could do anything differently to increase their profitability and maybe even decrease the amount of time that it takes for them to actually go about trading and executing their approach. I've seen people spend 10 hours per day trading and be profitable. I've seen people spend 15 minutes per day and be profitable. It does not matter specifically what you do. And it does not matter if that thing remains the same for a decade or whether it changes a million times over the course of a decade. The distinction between you and everyone else who is profitable. Because if you're watching this video, I'm assuming most people are not profitable watching this video, right? 95% of people fail. Only a small single-digit number of percentage of people can actually make enough money to survive from trading. It's really hard. It's like almost nobody wins at this game. Just like any other crazy business model that's really hard to make millions of dollars in, trading's just no exception. So if you're in that boat where you're not yet profitable and you're trying to get profitable, what you will likely learn is what I learned over the past nearly a decade. And as well as having seen thousands of people try to learn trading that I have coached, I have seen the same pattern over and over. The ones who get profitable are the ones who are willing to adapt. They're the ones who are willing to look at their results, to look at their data, to look at the metrics of like whether or not they win, whether or not they lose, how long they stay in a trade, whether or not to close it at break even after it starts ranging, a bunch of different bullshit like that. They look at all these different things and then they look and try to see where they can improve things. Okay. Businesses, like for example, Amazon, have only gotten to be the behemoth monopolies that they are in today's world because they were constantly adapting, they were constantly experimenting, they were constantly changing things to try to become better and better and better and better and better. Amazon is, if you're looking at the mechanics, not the same company it was a year ago or 5 years ago or 10 years ago or 25 years ago during its inception. Whenever you look at your trading approach, you are probably not trading an identical way to how you were trading even as recently as a year ago if you're profitable. There are probably slight changes in the mechanics of little tiny nuances and subtleties that you have found that works better today than worked maybe a year ago or 5 years ago or 10 years ago or 20 years ago. If you're not constantly adapting and evolving and making things more efficient and effective and better from now until the rest of your life, then you are really leaving a lot on the table. That is why my trading strategy has changed so much over the past decade. And that is why I will continue to change, because the only way you grow as a trader is by embracing change. And the only constant in every area of life is change. If you are not willing to change what you're doing to do things better and to grow and to learn, then you are at best plateauing, and at worst, you're actually going downhill. And you're losing so much of the texture and the granularity and the effectiveness and the efficacy of what you could be doing had you just been willing to embrace change. So with that being said, don't be afraid to embrace change. If you can embrace change in your trading approach and you can constantly be seeking to become better, then you get to the point where you wind up and you're 10 years down the line, 20 years down the line, 30 years down the line, and you are a better person and a better trader than you were when you first started. And that, my friend, that is a good thing.